Most traders believe the key to consistent profits is finding the perfect strategy, the right indicator, the ideal entry signal, some edge in the market that others don't have. They spend months hunting for it, switching systems every time they hit a losing streak, convinced that somewhere out there is a setup that just works. But here's what they never realize. Two traders can execute the exact same strategy, on the exact same chart, at the exact same moment. And one will steadily grow their account while the other destroys it within weeks. Richard Dennis proved this in 1982 with his Turtle Traders experiment. He gave complete beginners his exact system, his rules, even his capital. Some turned it into millions. Others crashed spectacularly. Same rules. Same market. The only difference was what happened inside their heads when real money was on the line. The truth is, the market doesn't reward the smartest analysis or the most complex setup. It rewards the trader who can stay disciplined when everyone else is unraveling. By the end of this video, you'll understand the psychological edge that separates the 5% who survive from the 95% who quit, and more importantly, how to build it yourself. Because once you realize the real battle isn't on the chart, everything changes. Welcome to Trader's Bible, the quiet room for market mastery. Let's get into it. Here's the thing most traders don't want to hear. The market isn't actually reacting to your analysis. It's exposing who you are. Every chart you stare at, every candlestick pattern you obsess over, every breakout you wait for, it's all just a mirror. And what that mirror reflects back isn't price action. It's your fear of being wrong, your need to control the uncontrollable, your impatience when nothing's happening, your greed when something finally moves. Think about the last time you took a loss. Really think about it. Did you calmly close the position and move on? Or did you feel something deeper? Like the market was personally attacking you, like it moved against you on purpose, like you needed to prove it wrong by jumping right back in. That feeling, that visceral reaction, that's the mirror effect. The market didn't do anything to you. It just moved. But your brain turned that movement into a story about yourself, and that story is what destroyed your account. Most traders think they're analyzing price when they're really just reacting to their own psychological wounds. If you hate being wrong, the market will humble you every single day until you either quit or learn to detach. If you have a desperate need to feel in control, the market will remind you how powerless you are until it breaks you. If you crave excitement and adrenaline, the market will seduce you into overtrading until your account bleeds out. This is why two traders can look at the exact same setup and see completely different things. One sees a calculated risk with defined parameters. The other sees their last chance to make back yesterday's losses, their ticket to financial freedom, their proof that they're smart enough to beat this game. Same chart, different minds. And that's why one walks away profitable, while the other spirals into revenge, trading by lunchtime. The losing trader doesn't realize they're not trading the market. They're trading their own emotions. Every decision is contaminated by what happened 10 minutes ago, what they hope will happen 10 minutes from now, or what they desperately need to prove about themselves. The winning trader has done the brutal work of recognizing this. They've accepted that the market is completely neutral, that it doesn't care about their mortgage payment or their ego or their need to be right. And that acceptance is what frees them to actually see what's in front of them instead of projecting their fears onto every tick. Now, here's where it gets uncomfortable. If your results are a reflection of you and not your system, that means you can't fix your trading by finding a better indicator. You can't solve this by switching from RSI to MACD or from scalping to swing trading. The problem isn't the tool. The problem is the person holding it. This is the truth that destroys most traders. You are the variable, not the market, not the strategy. You. And until you treat every trade as a data point for self-analysis, rather than just a financial outcome, you'll keep repeating the same destructive patterns. A profitable trader doesn't just review their charts at the end of the day. They review themselves. They ask, where did I feel fear? Where did I feel greed? Where did I break my rules and what emotional trigger caused it? They're obsessed with understanding their own psychology because they know that's where the real edge lives. The losing trader skips all of that. They blame the setup, the broker, the market conditions, anything but the person making the decisions, and so they never grow. They just keep crashing into the same psychological walls, convinced that the next strategy will finally save them. But strategy is just a tool. And here's the brutal reality. Giving a losing trader a winning strategy is like giving a Lamborghini to someone who doesn't know how to drive. It doesn't matter how powerful the engine is if the person behind the wheel panics every time they need to brake. Two traders can have the exact same rules, the same entry criteria, the same stop-loss placement, the same risk management, and still end up with completely opposite results. Why? Because when real money is on the line, knowledge becomes useless without emotional control. Let me show you what this looks like in practice. Both traders see a breakout forming. Both have studied the setup. Both know their plan says to enter here with a stop there and a target up there. Trader A enters the position, sets the stop, and walks away. Their mind is calm. They've accepted the risk. They know this is just one trade out of thousands they'll take over their career. Trader B enters the same position, but the moment price ticks against them by a few pips, their chest tightens. They start thinking about the money they lost yesterday. They start imagining what happens if this one fails too. That internal war zone opens up. One voice screaming, "Hold on, it'll come back." Another whispering, "Get out before it gets worse." They're paralyzed. And when they finally make a decision, it's emotional, not strategic. They exit too early, watch the trade move in their original direction, then jump back in late out of frustration. Now they're at a worse entry, the market retraces again, and they get stopped out for a second loss. Same setup, same market. One trader made money, the other lost twice. The only difference was what happened inside their heads. This is what I mean when I say most traders are overeducated but under-disciplined. They know what they should do. They've read the books, watched the videos, memorized the patterns, but when it's time to execute, their emotions hijack the controls. And all that knowledge becomes completely worthless because they can't access it through the fog of fear and greed. The winning trader has trained themselves differently. They've conditioned their mind like an athlete conditions a muscle, through repetition, through exposure to discomfort, through learning to sit with uncertainty without reacting. They don't need to feel confident before they take a trade. They don't need the fear to disappear. They've just trained themselves to act despite it. That's the real edge. Not knowledge, not strategy. The ability to execute your plan when every fiber of your being is screaming at you to do something else. And if you're finding value in this so far, do me a quick favor. Hit that subscribe button and turn on notifications. This channel exists to give you the unfiltered truth about trading psychology, the stuff most people won't tell you because it's not sexy or easy to hear. But it's what actually separates winners from losers. So subscribe if you want more of this, and let's keep going. Now here's where most traders completely deceive themselves. They think they're rational beings making logical decisions. But the moment real money is on the line, logic vanishes. What takes over is something much more primal, the desperate craving for certainty. Your brain hates not knowing what will happen next. It's wired that way for survival. In ancient times, uncertainty meant danger. Not knowing if that rustling in the bushes was wind or a predator could get you killed. So your brain evolved to crave certainty, to seek patterns, to convince itself it knows what's coming. The problem is the market runs on uncertainty. It's designed to be unpredictable. No trade is guaranteed. No setup works every time. And this creates a fundamental clash between what your brain wants and what the market offers. The losing trader can't handle this clash, so they try to force certainty where none exists. They convince themselves this trade is different, this one will definitely work. They overanalyze, looking for more and more confirmation until they're paralyzed. Or they move their stop-loss mid-trade because they've convinced themselves they know better than their original plan. They're trying to control the uncontrollable, and it destroys them. The winning trader thinks completely differently. They've accepted that uncertainty is built into this game. They don't need to know if this specific trade will work. They don't need certainty about the next candlestick. What they have is certainty about their process over time. They think like a casino, not like a gambler. A casino doesn't panic when someone wins at blackjack. They don't think, we need to change the rules, or this game is broken. They know their edge plays out over thousands of hands. One win doesn't matter. One loss doesn't matter. What matters is that the probabilities work in their favor over time. That's the shift. The gambler obsesses over this hand, this roll, this trade. The casino is unbothered by individual outcomes because they know the math works over repetition. And the moment you stop treating each trade like a life or death event and start treating it like just one hand in a game you'll play for years, everything changes. The pressure disappears. The emotional volatility flattens. You stop caring about being right on this trade and start caring about executing your process correctly over the next 1,000 trades. But most traders never make this shift. They want excitement. They want the adrenaline rush. They want to feel something. And here's the uncomfortable truth. Profitable trading is boring. It's the same setups, the same rules, the same process, over and over and over. There's no drama, no last-second heroics, no feeling like a genius because you caught the perfect move. It's repetitive, mechanical, unemotional work. And most people can't handle that because subconsciously, they prefer the thrill. They see trading as a lottery ticket, a shortcut to escape their current life. Every trade carries the weight of those fantasies, the car, the house, the freedom. And because of that, every loss feels unbearable. Every drawdown feels like failure. They can't detach because they've attached their entire identity and all their dreams to the outcome of each position. The winning trader sees trading as work. Not glamorous work, not exciting work, just work. They clock in, execute their edge, manage their risk, and clock out. If they make money, great. If they don't, they review what happened and come back tomorrow. Their identity isn't tied to any single trade because they understand this is a long game, not a sprint. This is the paradox that breaks most people. To succeed in trading, you have to chain yourself to discipline today so you can earn freedom tomorrow. You have to give up the fake freedom of doing whatever you feel like in exchange for the real freedom that comes from consistency. Losers resist this. They want to skip rules when something looks obvious. They want to double their position size when they're on a winning streak. They want to feel like they're in control. But that need for control, that resistance to structure, is exactly what keeps them trapped in the cycle of blowing up accounts. The final piece of this puzzle is something most traders never even consider. You have to decouple your self-worth from your profit and loss. Losing traders take every result personally. A winning trade means they're smart. A losing trade means they're stupid. The market becomes a constant referendum on their intelligence, their worth, their ability to succeed in life. And when you've attached your identity to your P&L, you lose all objectivity. You can't cut a loser because admitting you're wrong feels like admitting you're a failure. You can't let a winner run because you need to lock in proof that you were right. Every trade becomes about validation instead of execution. The winning trader has severed that connection. They don't see themselves as a gambler trying to get lucky. They see themselves as a business owner managing costs. A loss isn't a personal attack. It's a business expense, the cost of doing business in an uncertain environment. A win isn't proof they're a genius. It's just a trade that worked this time. Their identity is built on their discipline, their process, their ability to stay consistent, not on whether the market happened to move in their favor today. And here's the final paradox that ties all of this together. The less you care about being right on any individual trade, the more consistently you perform over time. Caring creates tension. Tension creates fear. Fear creates panic. And panic destroys execution. The traders who win aren't emotionless robots. They still feel everything, but they've trained themselves to execute despite those feelings. They don't need the market to validate them. They don't need this trade to work out. They just need to follow their process and trust that their edge will play out over enough repetitions. That's the mental edge, not some mystical superpower. Just the trained ability to see the market as it is instead of as you need it to be, to act on your plan instead of your emotions, and to treat each trade with the same weight as flipping a coin. Because once you realize the real battle isn't on the chart, once you accept that you are both the problem and the solution, that's when everything shifts. And that brings us to the next question. If the mental edge is this critical, how do you actually build it? Because knowing you need discipline and actually executing it under pressure are two completely different things. The question then becomes, how do you train your mind to stay calm when your account is bleeding? Because there's a specific process the top 5% use that has nothing to do with trying harder. Most traders think building mental discipline is about motivation. They watch inspirational videos before the trading session. They write affirmations on sticky notes. They tell themselves, "Today I'll be disciplined," and hope that declaration is enough. Then the market opens. They take a loss, and all that motivation evaporates the moment fear kicks in. They're confused because they tried so hard to psych themselves up, yet they still broke their rules. And that's because they're approaching this completely backwards. Mental discipline isn't built through motivation, it's built through conditioning. The same way you condition a muscle at the gym, through repetition, through exposure, through training your body to perform under stress. Your mind works the exact same way. You can't think your way into discipline. You have to train your way into it. And the top traders understand this at a level that losing traders never grasp. Think about a soldier. He doesn't walk onto a battlefield and hope he'll make good decisions under fire. He's drilled the same movements thousands of times in training, so that when bullets start flying, his response is automatic. His hands know what to do before his conscious mind even registers the threat. That's not motivation. That's conditioning. And that's exactly how you need to approach trading psychology. The process starts with something brutally simple that most traders refuse to do: building rules so tight that your emotions can't squeeze through the cracks. Notice I didn't say trying to control your emotions. You can't control fear. You can't control greed. Those feelings will always show up. What you can control is whether those feelings are allowed to influence your decisions. And the only way to prevent that is to design a system where the decision is already made before the emotion arrives. Here's what this looks like in practice. A losing trader wakes up and says, "I'm going to be disciplined today." Then a setup appears, and their brain starts negotiating. Should I take this? It looks good, but what if it's a fake out? Maybe I should wait for more confirmation. But what if I miss it? Okay, I'll take it. Actually, no, I'll wait. Wait, it's moving. I need to get in now? By the time they finally decide, the opportunity is gone, or they've entered at the worst possible moment. Their mind was at war with itself because there was no predefined structure to remove the decision-making process. A winning trader operates completely differently. They've already decided everything before the market even opens. They know exactly which setups they're looking for. They know their exact entry criteria. They know their position size. They know where their stop goes and where their target is. When the setup appears, there's no negotiation, no internal debate, no second guessing. The setup either meets the criteria or it doesn't. If it does, they execute. If it doesn't, they wait. The decision was made weeks ago when they built their system. Right now, they're just a machine following instructions. This removes emotion from the equation not because they don't feel it, but because there's no space for it to interfere. Fear might whisper, "What if this one fails?" But the system doesn't care. The rules say enter here, so they enter. Greed might scream, "Double your position, this one's obvious." But the system doesn't care. The rules say risk 1%, so they risk 1%. The structure protects them from themselves. But here's where most traders mess this up. They create rules and then immediately start breaking them. They'll say, "I only trade between 8 and 11 a.m., and then take a setup at 2 p.m. because it looked too good to pass up. They'll say, "I risk 1% per trade and then risk 3% because they're really confident about this one." They'll say, "I take profits at 2R and then hold for 5R because they want to maximize the winner." Every time they break a rule, they're teaching their brain that rules are optional. that structure is negotiable, that discipline is just a suggestion. The winning trader treats their rules like law, not because they're rigid or inflexible, but because they understand something critical. Consistency beats optimization. It's better to follow a mediocre system perfectly than to follow a perfect system inconsistently. Because the real edge isn't in the strategy, it's in the execution. And execution only becomes reliable when it's conditioned through repetition. This is why journaling is non-negotiable for serious traders, and why most losing traders avoid it. A journal isn't just a record of your trades. It's a mirror that forces you to confront yourself. After every trading session, the winning trader sits down and reviews not just what they traded, but how they felt. Where did fear show up? Where did greed appear? Where did they feel the urge to break a rule, and did they resist it or give in? They're tracking their psychological patterns the same way they track price patterns. Over time, they start to notice triggers. They realize they always overtrade after a big win, or they freeze up after 2 losses in a row, or they get reckless when they're bored. Once you see the pattern, you can interrupt it. You can create a specific rule that addresses that specific weakness. If you know you overtrade after wins, you create a rule. After a winning trade, I wait 30 minutes before looking at charts again. If you know you freeze after losses, you create a rule. After a losing trade, I review my entry checklist and confirm the setup was valid before taking the next one. You're not trying to eliminate the emotion. You're building guardrails around it so it can't derail you. Losing traders skip all of this internal work. They don't want to face themselves. They don't want to admit they're the problem. So they keep blaming the market, keep switching strategies, keep hoping the next system will finally fix them. But no system can fix a broken psychology. You can have the most sophisticated strategy in the world, and it won't matter if you can't execute it when your hands are shaking and your account is down. The other critical piece of conditioning is exposure therapy. You have to deliberately put yourself in uncomfortable situations in small, controlled doses, so your brain learns they're not life or death. This is how phobias are treated. If someone's terrified of heights, you don't throw them off a building. You start by having them stand on a chair, then a ladder, then a balcony. Gradually, their nervous system learns that height doesn't equal danger, and the fear response weakens. Trading works the same way. If you're terrified of taking losses, you need to take small losses intentionally until your brain stops treating them like catastrophes. Start with the smallest position size your broker allows. Take a trade knowing you might lose. Watch the money disappear. Notice what you feel. Sit with that discomfort without reacting. Do it again. And again, over time, your nervous system recalibrates. A $10 loss stops feeling like the end of the world. Then a $50 loss. Then $100. You're not becoming numb. You're becoming resilient. The same process applies to letting winners run. Most traders cut their profits too early because holding an open winner creates anxiety. They're terrified it'll reverse and they'll lose what they have. So they need exposure to that anxiety. They need to practice holding past their comfort zone in small increments. Take profit at 1.5 R instead of 1 R. Feel the fear of, what if it reverses? And do it anyway. Next time, try 2R, then 2.5R. You're teaching your brain that holding winners doesn't always end in disaster, and gradually that anxiety loses its grip. This is also why demo trading, despite what everyone says, actually has value, not for testing strategies, but for conditioning your psychological responses under lower stakes pressure. You can practice sitting with losing trades without spiraling. You can practice following your rules even when you feel the urge to break them. You're building the muscle memory of discipline in an environment where mistakes don't destroy your capital. Then, when you move to real money, the responses are already trained. But here's the part that separates the serious from the delusional. This conditioning never ends. The mental edge isn't something you achieve once and keep forever. It's a muscle that atrophies the moment you stop training it. The market will always find new ways to test you. You'll hit new account highs and feel invincible. You'll hit brutal drawdowns and question everything. You'll face setups that trigger old patterns you thought you'd conquered. And in those moments, your conditioning is what saves you. The losing trader thinks they'll eventually reach a point where trading feels easy, where fear disappears, where discipline is automatic forever. That day never comes. Even the best traders still feel fear. They still feel greed. They still feel the pull of breaking rules. The difference is they've trained themselves to recognize those feelings, acknowledge them, and execute their plan anyway. The feeling doesn't control the action. The system does. Think about professional athletes. LeBron James doesn't stop practicing free throws because he's already great at them. He shoots hundreds every single day because he knows the moment he stops training, the edge deteriorates. Trading is no different. You don't build the mental edge and retire. You maintain it through daily practice, through constant self-analysis, through relentless honesty about where you're weak and where you're improving. And here's what makes this process even harder. The market occasionally rewards bad behavior, and that's one of the most dangerous things that can happen to a developing trader. You'll break your rules, take a reckless trade, and sometimes it works. You walk away with a profit, feeling like a genius. And in that moment, your brain forms a connection. Breaking rules can lead to success. That's how addiction works. Intermittent reinforcement is the most powerful form of conditioning. It's why people get hooked on slot machines. They don't win every time, but they win just often enough to keep pulling the lever. The winning trader recognizes this trap immediately. When they make money on a trade where they broke their rules, they don't celebrate. They see it for what it is, a dangerous win that could rewire their brain toward self-sabotage. So they journal it. They acknowledge it was luck, not skill. They recommit to their rules specifically because the market tried to trick them into abandoning discipline. They measure their progress not by whether they made money, but by whether they followed their process. That's the only metric that matters, because it's the only thing they can actually control. Losing traders measure themselves by outcomes. Did I make money today? Am I up this week? That's a scoreboard they have zero control over. The market decides outcomes. But you decide your execution. And when you shift your focus from, did I win, to did I follow my plan? When your self-worth is tied to your discipline, rather than your P&L, that's when the real transformation begins. Because here's the final truth about conditioning your mind. It's not glamorous. There's no highlight reel. There's no moment where everything clicks and suddenly you're a different person. It's 1,000 tiny decisions stacked on top of each other. It's choosing to follow your stop-loss when everything in you wants to give the trade more room. It's choosing to sit on your hands when there's no valid setup, instead of forcing a trade out of boredom. It's choosing to risk 1% when you're tempted to go all in because you know this one will work. Every time you make the discipline choice, you're conditioning yourself toward consistency. Every time you give in to emotion, you're conditioning yourself toward chaos. And the scary part is, you can't fake this. The market will expose the truth eventually. You can pretend you're disciplined for a week, maybe a month. But when real pressure arrives, when you're deep in a drawdown, when you've just had 5 losers in a row, when you're one good trade away from making back everything you lost, that's when your real conditioning shows up. And if you haven't built it, if you've been relying on motivation instead of structure, on hoping instead of training, the market will break you. Not because it's cruel, but because it's honest. It reflects back exactly who you've conditioned yourself to be. So the question isn't whether you understand the mental edge. The question is, are you willing to do the unglamorous, repetitive, boring work of building it? Because that's where the separation happens. That's where the 5% split from the 95%. And what comes next will show you exactly what that daily work looks like. You came here thinking the difference between winning and losing traders was about finding the right strategy, the perfect indicator, some secret edge hidden in the charts. But now you understand the truth. The real battle was never on the screen. It was always in the mirror. We've covered why the market doesn't reward the smartest analysis. It rewards the person who can stay disciplined when everyone else is unraveling. We've seen how 2 traders with identical strategies get opposite results because one treats trading like a casino managing probabilities, while the other treats it like a gambler chasing certainty. We've explored why knowledge without emotional control is just a Lamborghini in the hands of someone who can't drive. And we've broken down exactly how the top 5% condition their minds through structure, repetition, and brutal self-honesty, instead of relying on motivation that disappears the moment fear arrives. The traders who make it aren't smarter than you. They're not luckier. They're not working with information you don't have access to. They've just accepted one uncomfortable truth. You can't control the market, but you can control yourself. And in a game where everyone else is fighting external enemies, the person who wins the internal war has an edge no indicator can replicate. So before you open your charts tomorrow, ask yourself this: are you still looking for the perfect setup to save you? Or are you finally ready to build the mental edge that makes any setup workable? Because once you realize you've been the variable all along, everything changes. If this shifted how you see trading, subscribe to Trader's Bible for more unfiltered truth. And if you're serious about this, go back and watch this again. The concepts here aren't meant to motivate you for a day. They're meant to rewire how you think permanently. The market opens tomorrow. Same charts, same opportunities. The only question is, which trader will you be?